Imagine passing landmark crypto legislation, only to have your own party block it over ethics. That is exactly the situation gripping Washington today, Saturday, July 25, 2026. The White House has issued a pointed message to Senate Democrats: accept the victory you already won on Donald Trump's crypto limits, and stop holding the entire Clarity Act hostage. This is not a minor political spat. The Clarity Act is the most significant piece of digital asset legislation the United States Senate has attempted in years, designed to draw clear regulatory lines between cryptocurrencies that should be treated as securities and those that fall under commodity rules. Yet, after months of negotiation, the bill sits in limbo, blocked not by Republicans, but by a faction of Democrats who believe the ethics provisions limiting presidential crypto profits do not go far enough. Today, we break down exactly what is happening, why it matters, and what comes next. To understand the standoff, you need to know what the Clarity Act actually does. Unveiled formally by the U.S. Senate Banking Committee in May 2026, the act is designed to resolve a fundamental question that has plagued crypto regulation for years: when is a digital asset a security, and when is it a commodity? That distinction matters enormously because it determines whether the Securities and Exchange Commission or the Commodity Futures Trading Commission has oversight. For investors, it means clarity on what is legal, what is not, and what protections they have. The bill also includes provisions around stablecoins and exchange-traded products, making it one of the most comprehensive attempts at a regulatory framework for digital assets that the U.S. Congress has ever produced. Supporters argue it would bring hundreds of billions in institutional capital off the sidelines and position the United States as a genuine global leader in digital finance. So why are Democrats blocking it? The core dispute centers on one thing: ethics rules restricting Donald Trump and other senior officials from profiting personally from cryptocurrency markets during their time in office. Democrats pushed hard for these provisions, arguing that without them, the president could personally benefit from a regulatory environment he helped shape. And initially, they won. The ethics language was included. But in a new draft that emerged on July 22, 2026, the ethics rule was made temporary rather than permanent. Senate Democrats, particularly senior figures on the Banking Committee, balked. They called the weakened language a loophole that would allow future administrations, or even the current one, to exploit crypto markets with minimal accountability. From their perspective, the battle over the ethics clause is not a procedural squabble. It is a fundamental question about whether the rule of law applies equally to those in the highest offices of government. The White House is not staying silent. On July 24, 2026, senior administration officials pushed back firmly, arguing that Democrats are overplaying their hand. The message from the White House was blunt: Senate Democrats already secured a meaningful victory by getting ethics restrictions into the bill at all, even in their current form. To continue blocking the broader legislation over the precise permanence of those provisions is, in the administration's view, political self-sabotage. White House officials contend that the Clarity Act, as it now stands, still represents a significant constraint on presidential crypto activity, more than any previous American law has achieved. They argue that by refusing to accept this, Democrats risk losing the entire legislative window, because there is no guarantee a future Congress will take up the bill again. The administration's position is clear: take the win on the table, or risk walking away with nothing at all. The situation has moved quickly this week. On July 21, 2026, it was reported that the Clarity Act was still at the mercy of the ethics section, with Democrats refusing to back the Trump-brokered deal. The following day, July 22, 2026, a revised version of the bill surfaced, described by sources close to the process as a starting point for a final draft. This new version made the ethics restrictions temporary rather than permanent, which was seen as a concession to the White House. By July 23, 2026, key Democrats were still rejecting the ethics language, prompting the White House's formal and very public pushback on July 24. As of today, July 25, 2026, no deal has been finalized, and the bill remains in a precarious position with the summer recess fast approaching and both sides showing no immediate signs of compromise. Political uncertainty has real-world consequences for crypto markets. While Strategy, formerly known as MicroStrategy, made headlines on July 24, 2026 by raising $263.5 million through the sale of over 2.7 million shares while keeping its Bitcoin holdings entirely unchanged, the broader market is watching Washington closely. Institutional investors waiting to deploy capital into regulated crypto products cannot do so with confidence while the Clarity Act hangs unresolved. Exchanges, asset managers, and blockchain firms have lobbied hard for this legislation because it would finally tell them which regulator they report to and what compliance looks like in practice. Every week of delay is a week of uncertainty, and uncertainty is the enemy of investment. Estimates suggest hundreds of billions in institutional crypto capital are sitting on the sidelines globally, waiting for a regulatory green light from the world's largest economy. The immediate question is whether a compromise can be reached before the Senate summer recess. If no deal is struck, the Clarity Act could stall indefinitely, leaving crypto regulation in the same gray area it has occupied for years. The White House appears to be betting that Democrats will eventually fold, calculating that the political cost of killing landmark crypto legislation outweighs the benefit of holding out for permanent ethics rules. Democrats, meanwhile, may be gambling that public pressure over Trump's crypto entanglements will force the administration to accept stronger language. What is certain is that the window for action is narrow. The 2026 midterm elections are approaching, and both parties will soon be focused more on campaigning than legislating. A deal in the next 2 to 3 weeks, or potentially no deal at all this year, is the realistic outlook for investors and observers watching closely. The fight over the Clarity Act is about far more than cryptocurrency. It is a test of whether the U.S. Congress can pass functional financial regulation in a deeply polarized environment, and whether ethical guardrails on political office can survive the process of negotiation. The White House says Democrats won, and should act like it. Democrats say the win was diluted, and they will not pretend otherwise. Somewhere between those two positions lies a deal that could shape the future of digital finance in America for the next decade. This story is moving fast, and the outcome matters to anyone who holds, invests in, or simply follows the cryptocurrency space. If you found this breakdown useful, please subscribe to this channel for daily coverage of the policies and markets that matter most to investors and citizens worldwide.